Welcome to Beyond the Balance Sheet, the podcast where we go beyond numbers to tell the real stories behind money. Every financial decision you make carries a story, a dream, a lesson, and sometimes even a struggle. Here, we explore the choices that shape lives, the emotions tied to wealth, and the insights that lead to success. This episode is brought to you by Vuka Investment Club, Kenya's first wealth tech platform, helping you invest in resilient, secure, profitable, and regulated real estate.
In today's episode, we are tackling a topic that affects every business owner. If you are an employee, if you are somebody who calls yourself an investor, if you are anyone doing any form of business, then we're going to be talking about taxes today. And that's why you need to be right here. Now, we're going to be covering the basics and not so basics about taxes. You know, we're in the season where we are filing our returns. It's the month of June, or rather now it's July. By the time you're watching this episode, it is July. And you should have filed your returns to avoid some of those penalties. Now, we're going to be discussing, maybe you've been wondering, you know, as an employee, why is your salary feeling like it's reducing every single day when there's a tax mentioned, or when there's a finance bill being discussed, we kind of feel tense and we never know what's going to be happening. Now, in this episode, we're going to be talking to a tax consultant. They're going to be taking us through, the simple way of understanding taxes, how we can make it work for us, why we need to be compliant, because sometimes we try to be a bit tricky and avoid these taxes, but what the benefits of being compliant. And you might even get some tips on how to save yourself some coins while navigating the tax system in Kenya. So, ladies and gentlemen, stick to your seats. And this episode is for you, and you don't want to miss a thing. So I want to invite Ruth Mwiti. Thank you so much for coming to the show. And please just tell us a bit about yourself, and so that we can get right into it.
So thank you, Chris. My name is Ruth Mwiti. I am a tax consultant, a director at TAC Professional Services Limited. At TAC, we offer tax consultancy, tax compliance, and tax advisory. So we are happy to be here, and we hope that we will be able to simplify and help you understand in simple terms what is tax and why you should pay taxes. Thank you.
All right. Thank you so much. And I'm glad you're here. You know, tax is always such a sensitive topic. Anytime we hear finance bill, tension runs in the veins and we never know what's going to happen. But I want us to just break it down for anyone who's watching this episode. First, why is it important that we understand taxes? You know, I feel like lack of information makes us always overreact to certain things. So we want to just unpack some of those things. So let's just start with, why is it important to understand taxes as an individual in this country?
All right. Thank you for that question. And to answer your question, is that tax is based on the law, the tax law. And when something is law, then we have to comply. So for you to be compliant, then you need to be compliant on something that you understand. So that is why you need to understand, why am I complying? What are my obligations? So in Kenya, we have two forms of taxes. There is what we call direct taxes, and there is also what we call indirect taxes. What is direct tax? Direct tax is the tax that you as an individual, you pay directly to the government. For instance, for employees, it's your pay as you earn. It's direct from your income. For companies, it's direct from the profits that a company makes. Then there is the other taxes that we call indirect taxes. Indirect taxes are not paid directly, but you will pay them. For instance, you go to the supermarket, you will see that receipt has VAT. That's an indirect tax. So once you understand the two types of taxes, then you know that yes, you're paying indirect taxes, like the taxes that you pay at the supermarket, the VATs and the excise duties. But the fact that you've paid VAT, the indirect taxes, doesn't mean that you have paid taxes on your income. So you need now to pay taxes on your income. So that is in broad terms, that is the differentiation: income versus non-income.
All right. So basically, whether you're employed, there are certain taxes that you must comply with. Whether you're in business, you're running a biashara, there are certain taxes that you must be compliant with.
Yes.
And so maybe we can start at a general level before we get down into the deep. Huh? So, for example, when right now we are in a season where the government is just discussing the finance bill, for example. What is the finance bill? Why is it an important document for us as Kenyans? Because I feel lack of information sometimes affects us. So what is a finance bill, and then how does it then translate to taxes that then affect our pockets? Yeah.
Right. So every year the government comes up with a budget on the income that is expected and the expenditure that is expected to be spent. For instance, the government will say we want to do roads, we want to allocate some funds to the hospitals, so many of the activities that government does. And the question is, where does government get the money? And definitely money comes from taxes. So if you look at last year, you will realize that there was a budget. Again, this year there was a budget. What do you want to spend on? Then now the finance bill comes in to try and see how can this government finance the budget. So the finance bill is always mandatory every year and has been there actually. It's only that recently people have come to understand it or to know of it, but it has been there for the last since time immemorial. So the aim of the finance bill is to identify how is government going to raise this additional revenue to be able to finance the budget. So it's every year. What happens is that, yes, you have a finance bill, but sometimes it feels like some people, like employees, are being overtaxed because you will find like issues like housing levy, VAT is being increased or VAT is being removed on some products. So that's where it now impacts us. But is it necessary? Yes. Why? Because government has to finance. But of course, there has been a lot of debate on we are paying taxes, but we are not receiving services. So that's now a question that is should be directed to government in terms of accountability. But whether taxes needs to be levied, the answer is yes. And it is stipulated in the law.
So it's the government trying to raise funds to fund the projects, to fund whatever, infrastructure projects they have as well. Education,
medical,
hospital, all those things.
Service delivery.
Okay, great. I feel it's good that we start there because sometimes we feel that what's the aim of paying taxes? Why can't we just be allowed to, operate as freelancers? So the tension that usually comes in with taxes is we feel that it's such a burden on us. And from your, as your company, you're a consultant for companies in terms of taxes. Why do they feel like it's such a big burden for them to pay these taxes?
Right. I think why taxpayers, me included, I don't know whether Chris, you're included there, but
yes.
I included, is because maybe just a comparison with other countries or other developed countries, you will find that in Kenya, you are paying taxes. Currently, the highest band being 35% for individuals and for companies 30%. But despite paying 30%, you find that you're still paying for school fees, you're still paying for medical, you're still paying, like we now pay the expressway, and then
the same services that they were meant to finance.
Unlike other countries where you will pay high taxes, yes, but you are not worried about hospital bills. You're not worried about education. So I think that's why in Kenya we feel that it's a very huge burden because you're paying, but at the same time you're doing what the government should be doing for you. So if there was a flip, the government, yes, tax us, but also give us education. Let me not worry about my parent getting sick and me paying a huge hospital bill. Then I think that would help. Yeah, because I hear like in some countries like France, you'll pay very high taxes, but you will never worry about school fees. So actually the money that you're left with is just money for you to spend. So you are even able to save more because you're not worried about other things. So it's burdensome because on top of it, you have to
feel
pay
there's
for your
extra
basic.
that we have to, that we do on top.
Yes.
What about the mode of payment? Are the systems too stringent? Is that also a factor in terms of people being compliant to filing their returns? Sometimes we have some tight deadlines. Is it 9th by 9th of the next month by this date and that? Are those a bit tight for people as well?
Yeah. One, I think the system is overlapping. The taxes are overlapping on each other. Like I will give you an example as us as tax consultants. Every week we have a deadline that we are pushing.
Yeah.
On 9th, we are pushing to pay as you want for clients and SHIF, NSSF, NITA.
Yeah.
Then on 20th, we are pushing to pay VAT excise. Every week, we are paying withholding tax, withholding VAT. So it's too much going on. Even as business people, it's too much because if you don't have an accountant, then you will miss out on some of these things. Also, sometimes the system keeps on changing. Like currently, we have what we are calling the VAT auto-populated. We have items. So many changes within very short periods of time. And therefore, it becomes very hard. For employees, I understand. Every month you're deducted pay as you want.
Yeah.
And your employer remits. Then you're expected to file a return at the end of the year.
June,
and maybe you don't have any other income. So you wonder, if my employer did it, why do I have to do it? And why am I being penalized? So yes, the system maybe needs to be simplified, especially for people who are in employment or the people who have no access to probably accountant. They are doing their side hustle out there.
Okay.
Yeah, it needs to be simple so that it doesn't have to be stressful.
Okay, so we've briefly started touching on people's pockets. When you mentioned PAYE 35% and company 30%. So how does somebody, let's talk about the people in employment, all right? What would you advise them? Because they don't understand why their paycheck keeps reducing. Yet nothing has changed. The work is still the same and all that. Now that it affects our pockets, what would be your advice to people now that we are reducing our net pay is reducing? How do we survive in these tough times?
Now that question, I will answer it in two forms. One, from a tax saving angle, so maybe from I know, Chris, you do personal finance.
Yes.
From an aspect of how do you add more?
How do you manage your money?
Do you add more?
Yes.
Because there are limits. For instance, the current pay as you want brackets start from 0 to 28,000. You are taxed at 10%, meaning you will not pay PAYE. Between above 24,000. Above 24,000, then it gets to 25%, and then there is the last band, which taxes. Sorry, not the last band, but the third band, which taxes at 30%. For people who are earning above 500,000, again there is 32.5%, and now above 500,000 they are taxed at the 35%. So first is understanding, where do you fall? What is my salary? And take some moment to compute based on the pay rate, so that you can confirm whether the taxes that you're being charged are high or are correct. Then after that, you need now to take what we call tax saving measures. For instance, in Kenya, we have what we call pension. Allowable contributions. Currently, the allowable pension contribution is 30,000 per month, tax free. So, for instance, if you're earning 100,000 and you want to get some savings for retirement and also on taxes, if you pay 20,000 to a pension scheme, a registered pension scheme, then it means you'll be taxed on 80,000 and not 100,000. So you've saved but you've saved for retirement, but at the same time you've saved on your taxes because you're paying on 80 instead of 100. The other way, so that is one of them, the pension. Then there is what we call insurance relief. If, for instance, you take a medical cover, a retirement cover, or you even take a life cover, education, medical, again, you enjoy 15% tax saving on your premiums up to a maximum of 5,000 per month. So again, you're being encouraged to secure your future. But at the same time, you're saving. Then there is what we call mortgage relief. Mortgage relief, if you secure a house through mortgage, you are allowed up to a maximum of 25,000 tax-free per month. So it's just identifying, yes, there are small measures, and sometimes our people or employees feel like, if I have to save for retirement, save insurance, I save for mortgage, like I'm left with nothing. But it's just looking at how can I be able to achieve my personal financial goals and at the same time save on your taxes? Because if you were to add the 25,000 exempt for mortgage, you add the 30,000 exempt for pension, you add the 5,000 for insurance, you will end up reducing. There's small savings that matter. So it's just understanding where can I save, and in addition to that, if you feel, I know it's tough, but if really the incomes have gone down because of the taxes, it's how else can I make an extra coin? Yeah, so that you cover it up. That's those are some of the measures. There are more, but those are the main ones that individuals use. For business people, is making sure that each and every expense that you incur in your business is accounted for. Because the problem now with business is that they will receive money, but they will spend it. They have no record of how they spend the money. So for business, we encourage, get your expenses right in order. When you go to a petrol station, get your receipts. That way, if you made 100,000 from your business and you spent 80,000, you'll only be taxed on 20,000. So it's just making sure that your records are right for businesses. For individuals, taking advantage of those schemes.
Wow. Thank you so much. We rarely focus on, there are also good sides. There's also a good side where the government is trying to help us to secure our future, as you say. Like they're helping you to secure your first home, encourage you to secure your first home by, giving some tax advantages, benefits on the mortgage. For example, the pension, which not many people actually take advantage of. And I feel we need to really educate people when it comes to that. And there needs to be more platforms that people get to know of these things. Because I feel people don't really... they can't take advantage of them. We're always focusing on, my payslip. This is the net amount going to my account. But I love your advice to also the business people that you need to account for every expenditure. Now, there are those of us who are hustlers. This term was introduced to us by during the campaign period where, hustlers are coming in. And now, what should a hustler know? Because a hustler is somebody who's just starting a business with their capital, maybe just 5,000 or 10,000 shillings. What should they know about taxes? I mean, how would you advise somebody who's just coming in? What do they need to know? Or which taxes would apply to them? Maybe we should ask.
All right. A very good question. And actually, Kenyans are hustlers, most of them, yeah? So when you think about hustler and tax, the question is, how are you hustling? Are you hustling as Ruth or as Chris? Or do you want to formalize it in a business? For instance, you want to use a registered business. Then the second question is, the question is, how are you hustling? What is the form of, are you an individual or a business? Then the other question is, what is a hustle?
Okay.
Why I say what is a hustle is because there are some hustles like consultants, like what we do. We might not be able to take advantage of some of the tax schemes that are provided in the law. But for instance, if you're out there and your business is trade, like for instance, you normally buy some bed sheets and you resell.
Okay.
There is what we call a turnover tax regime. The turnover tax regime taxes revenue at 1.5%. Imagine you make 100,000, you pay 1,500, and that's final tax. If you're in the sale of goods space. So
is there an income amount that makes you qualify for that, or is just anybody?
Yeah, so anybody. As long as you're a mechanic, you're selling some electronics, those businesses that are not consultancy or professional in nature, you can be able to take advantage of that scheme. It's called the turnover tax regime. The revenues threshold are between 1 million per year and 25 million per annum. So if you're in that
doesn't
space,
depend on your expenses or nothing like that. So it's just a one-off you pay, and it doesn't matter anything else.
Per month on 20th of the following month. For instance, like now we are in July. So you take all your revenue for June, do 1.5%, and you have no questions from government.
They won't come follow up. Where is your documents?
They will come. Maybe they will come and follow up on documents, but they're just checking on how much company, how much revenue did you make. In terms of expenses, you're free to spend your money. Then there is what we call the rental tax regime, monthly residential rental tax regime. It taxes you at 7.5%. So those people who have developed residential premises and they are renting it out, again, you can take advantage, because if you're paying 7.5%, you're better off than these as consultants who have to pay at 30%, and you pay the 7.5% and it's final tax. So those are some of the. So what is the hassle, and how are you formalized? So then there is now you're not in the revenue in the turnover tax regime. You don't want that turnover tax regime because it's a monthly. You don't want rental regime because it's also monthly. Then the only other way is income tax. Income tax, we say income tax, you pay tax on profits, not on revenue. So you take your income plus less your expenses, profit at 30%. The only downside about income tax is that your records must be proper. So if you're a hustler and you don't want that headache of keeping receipts, then opt for turnover tax regime, because there you will not have to fight with anyone. But if you want to pay tax on profit, then make sure that your profits can be verified. Profits is income minus expenses. You bought this phone from China at 20,000, you sold it at 30,000, you'll pay tax on 10,000 at 30%. So that's the difference. So, but to again now answer your question directly, that are hustlers supposed to pay taxes? And
I mean, that's the ultimate question.
And the answer to that question is yes. Everybody, the law requires that everybody must pay taxes.
Nowadays, there's this online platform that we have where we're also doing online businesses, transacting, buying and selling online. How do taxes come in there? Can you help us out? Those of us who, there are people, influencers there who are, doing things online. There are people who are selling their services online. So how do they ensure that they are compliant as well?
Actually, it's the same. I know your question is directed to digital service tax.
Digitals, yes.
But what happens is that the even digital service tax is a form of income tax. So you will be deducted the digital service tax, but again, you have to come and account for the income tax. So at the end of the year, you need to, if you're an influencer, check how much money did I charge my clients for influencing. Yes, they might have deducted the digital service tax, but you will need to do your P&L, your income, what were your expenses, and then after you you do that, you identify this, I'm supposed to pay 30% of the profit. Then the digital tax, service tax that was deducted is just like an advance tax. It's a form of withholding tax. It's not a final tax. So I think that's where people need to understand. And why digital service tax? Why? Some of those people who are influencing, or those people who are in the digital space, somehow it's very hard for government to catch up with them. Reason being, the law was designed during an era where there was no digitization.
There was no digitization.
So there is no clarity on how to catch these people. And so when they introduce the digital service tax as a form of like a withholding tax, is to be able to catch that person. Because if I influence and I'm deducted a percentage, then definitely government is aware that I got some revenue.
Services, yes.
But is it final tax? No. That because that is a misconception that many people have, that if, for instance, I'm a consultant or a contractor and my customer deducts 3% or 5%, that is final tax. It's usually not final tax. It is an advance tax, because we talked about income tax. So you compute your income tax and then offset the advance tax that was deducted. Yeah. So that's the difference. And the ultimate is that the main tax that individuals, a hustler, a businessman, an employee, anyone who is doing any form of hustle, the main tax is income tax. So ask yourself, where do I fall in the income tax regime? Am I turnover tax? Am I employee pay as you earn? Or am I income tax 30%?
Which one works for you?
Which one works for you?
Okay. You touched on something saying about misconceptions, and maybe we can expound a bit on that. What are some of the misconceptions that maybe you've had as you've been consulting for people, that people have about taxes?
Wow, a recent one.
Uh-huh.
We have one of our clients who we do their monthly VAT returns. So every month we will compute and tell him this is the VAT that you should pay. So now it's the June deadline that expired yesterday.
Yes.
So we told him, and this is your income tax. And he was like, no, but I've been paying my VAT. So one of the big misconceptions is that if I pay VAT, then I am not supposed to be asked for any other tax. First, I want to agree that these taxes are too many. You have VAT, you have turnover tax, you have income, you have withholding. Yes, we agree those taxes are too many. Maybe government should find a way. I always feel that they should find a way of just targeting maybe one or two taxes maximum, so that it's not too much. But one of the misconceptions is that when I am deducted some tax somewhere, if I'm a consultant, that is final tax. When I pay VAT, that is final tax. If I'm a contractor and I am deducted withholding tax by my client, that is final tax. Or if I am deducted pay as you earn as an employee, then I should not file my return.
Because it just makes sense, surely.
All right, maybe why the system is designed that way. You can be an employee, but you're still doing some business.
Some business, yeah.
Okay. So if you were to say that I'm an employee, that's what you are saying, then if I am an employee and I have this business of mine that I'm making 100,000 per month, then I don't need to pay tax on that. So the filing bit is for you to know
any other income that is there.
Because I don't think it is possible for government to know exactly what each and every individual is doing. It's not very possible for government to know that all employees don't have side hustles. There are chances that maybe 50% of employees have side hustles, and that's why then they have to file the returns. Yeah. So it's now for you, if you're an employee and you don't have any other, it's very simple nowadays actually. You just need to, everything is on the system. So if you've been paying if your employer has been paying pay as you earn, you just need to log into iTax and say employee only, and within 2 minutes maximum, you will have filed your return. It's simplified. You don't have to fill those Excel sheets. But if you have any other income, then you have to fill those Excel sheets. Yeah. So so that's a misconception that if I am an employee, I don't need to file
Any
returns.
other thing.
Yeah. If I'm a consultant, I'm deducted with, or if I pay VAT, if I pay VAT on fuel at the petrol station, why am I paying any other tax? Those are misconceptions, because the law is that you have to pay income tax on your income. Yeah.
Maybe now we can touch a bit on the compliance aspect of it. For example, e-teams. E-teams is something that was introduced, and I don't know whether you've been having challenges with it, but maybe just explain what e-teams is all about. Because many of us are entering business, you're bombarded with so much information. You don't even know which one to process, which one to not. So how does e-teams play in all this? Because what is the other one called? The ETR. Maybe just talk a bit into that. Yes.
Well, e-teams, I talk a lot about e-teams, by the way. And every time I mention about e-teams, people think that don't tell us about that thing. But we always say that information is power, and because where we are heading, we will get to a point where you will also lose business if you're not on e-teams. But anyway, what is e-teams? E-teams is it stands for Electronic Tax Invoice Management System. So when we say a system, it's a system that manages invoices. And why? I am Ruth here. I'm a hustler. I go get a client. I do for them some consultancy, and they pay me. And that information is not with anyone. What does that mean? That the chances of me paying tax on that income are very low. So the system, the electronic tax invoice management system, was introduced to be able to alert government that I have offered a service to Chris. I've charged 100,000.
Basically, a transaction has occurred somewhere.
Somewhere a transaction has occurred, and so government is expecting taxes from Ruth. Unlike currently or before e-teams, government has no visibility of what I am doing. And why? Because the government has really struggled in taxing the informal sector. We hear the informal sector, the Juakali sector is where the money is.
Where's the money?
But are you able to get to know how much sales Mama Mboga did?
No, you can't.
You can't. Are you able to know a mechanic who is on grog on what they did? You're not. Is he paying tax? He's paying indirect taxes, but he's not paying direct taxes. So you find that guy is out there is making so much money, even more than an employee, but an employee is paying 30%. So e-teams is the aim of e-teams is to bring everybody on board, because what does e-teams require? It requires that if you have provided a service, you must issue an e-teams invoice for that invoice to be an allowable deduction. And what do we mean by an allowable deduction? Because I know these terms sometimes are technical, but remember we said that income tax, we talked about profit. You have your income and you have your expenses. Now, what e-teams has come to introduce is that those expenses, for them to be allowed by the commissioner, for you to say I made a profit of 20, then those expenses need to be supported by
e-teams invoices. Yes.
So if there is no support, then what does it mean? It means that government does not recognize. Does not recognize, and it's not allowable. So then what everyone needs to do, if you're in business and you're spending money, then you need to spend money and get e-teams compliant invoices for that to be allowable. So it's very, very tough now in terms of practicality, because I've interacted with very many people on this subject. Sometimes they will ask you, how do I expect a farmer who is in Kericho to have an
And
e-teams?
e-teams, yes.
Sometimes it's
even the
so
laptop navigating an e-teams is another
it's so
headache by itself.
technical. You don't know.
Mhm.
I feel it should be simplified. For instance, if you're dealing with mama mboga, probably they should introduce a withholding tax so that they don't have to burden them, because that mama mboga there, I'm here asking for an e-teams, and there's somebody else there who wants to buy mboga in a hurry to go home.
Yeah.
They will not give me that e-teams. And why am I being punished? Because this mama mboga
because
did
now
not.
what it means is you won't be able to justify your
Exactly.
expenses.
Yeah.
Okay.
I'm not able to justify my expenses.
And so you have a lot more tax to pay.
But if they were to simplify it in the form of, if I'm trading with that person, let them not give me an invoice, but let me deduct some tax, which is a final tax. So they have paid their tax. For instance, the 1.5% turnover tax. I've bought mbogas of 1,000. They deduct 15 shillings. I deduct 15 shillings.
150, is it? Oh, 15 shillings.
15 shillings.
Oh, 15 shillings, yes.
I paid the
1.5.
lady 985.
Okay. Yes.
She has paid her tax, and me, I'm not being punished.
For
I
that.
think maybe that would be a better approach, especially when you're dealing with those very informal sectors. And then now, when we come to the formal sector, we see how maybe it can continue for the formal sector. But for the informal sector, it is very, very, very hard for businesses. So e-teams, what I've heard is that from next year, filings for businesses will only be done through e-teams. So what does it mean? You will get all that data. And so anything that is not on e-teams, you will not be able to input it manually. So what
technically everyone must get on e-teams now.
Everyone
There's
needs
no option.
Yes.
Wow. Now that we've said how we get ourselves in problems is now, let's say somebody now has not been compliant. There are things, there are penalties that come. Maybe just mention just one of the few, highlighting some of the penalties that affect most of us. And if sorry about that. And if maybe you have even the amount of the penalty, that would also help. Like maybe late filing of returns, this is a penalty. Maybe if you can touch on a few of those.
All right. Yeah. So the penalties come because of two things.
Yeah.
One, late filing or non-filing, or late payment or non-payment.
Okay.
So late filing for individuals is 2,000 per year for income tax. So 2,000 for individuals per year, and for companies is 20,000. Late payment attracts what we call an interest. So you can file, but you pay late.
Okay.
Late, why? Because, like, for instance, income tax is due in installments. For installments, first 20th of April, 20th of June, 20th of September, and 20th of December. And the final tax is usually due by 30th of April. So if you've not paid, then interest applies. What is the rate of interest? 1% per month. So if you didn't pay 10,000, then 1% per month.
On the outstanding VAT.
On the outstanding VAT or on the outstanding tax. It's actually
on the outstanding tax. Basically,
on the
it's across
outstanding
board.
It's across board, yeah. For VAT, again, late filing, 10,000. And for turnover tax, late filing, 1,000. So it's either you've filed late, or you've paid late. Late payment, 1% per month. So until you pay. And that's why there has been an amnesty, which expired on 30th June. Which was trying to waive all those penalties and interest. Because sometimes people, in fact, one of the common, again, mistakes that people make, you will register a company, but you even forgot. So you've never filed your return. So just to regularize that. Yeah, it happens. Or so many people have
could
many
be thinking
companies
that I'm not transacting that company, so I leave it idle
to
there.
file. Yeah, whether you have a company, whether you, as long as you have a PIN, you must file your taxes.
Wow.
Yeah.
Okay. One practical thing that Kenyans can do to improve their knowledge on taxes. What's the one practical thing that they can do?
One, have an accountant.
Okay.
and at least somebody you can consult, especially if you're in business. You don't have to have a full-time accountant, but you need to have a number of a tax consultant or an accountant who you can consult, because it's very difficult for people to keep this information. And then the next important thing is to, if you're not able to engage a consultant, at least ensure when you hear there is a forum or there's a webinar on taxes, just take time to join, because some of what has been happening of late in the last like 5 or 6 years, even some of us who have been in the industry for very long, things change each and every day. So be informed. Take advantage of the webinars that are offered by KRA, the webinars that are offered by tax consultants, and any forums, because nowadays I see tax is a very hot topic. Any forums where you can hear they will talk about tax, just go listen. You might know, but there's something new that has come that might impact. So information. Get information so that you don't lose out because you didn't know, but you lose out because you probably decided, let me not file, but not because you didn't know, because ignorance is no defense.
Doesn't excuse you. All right. Your final advice to somebody who's watching this episode. What should they know about taxes, or how to comply, or why they need to comply, or just your advice to them based on your profession? Yeah.
All right. I'll start with the individuals and the employees. At least have your PIN, have your password. We've been yesterday I got like 10 messages. Please file for me my returns. Okay, give me the KRA PIN. You send me. Give me the password. You don't know.
Don't know the password.
You even forgot the email. At least have your PIN and then password. And then at least log into your system. Last week, people received messages telling them you have debts. It was so scary for so many people. But the question is, have you taken a chance to log into that system and check, or ask your accountant to check for you? So at least be proactive.
So be logging in frequently. Yes. At least you get to see what's in the system.
What's in the system. Okay. That way, at least you know I have filed or I have not filed. Or even if then you don't want to do that, when you log in, or just ask your accountant, generate for me a tax compliance certificate. The time when we are generating tax compliance certificate, the system flags issues. Like, for instance, you have outstanding debt, you have outstanding returns. So at least when you talk to your accountant and
raise a flag, and you can now act on it.
You can act on it. So at least for me, it's just try and have your PIN, have your password, logins to your account, and ask your accountant, what taxes should I be paying, so that you don't you're not there and you have no idea, and then when you're caught, you're like, I didn't know. At least you need to be informed. So get information. So that's what it's technical. Even for us, sometimes it's hard. But at least if you have somebody you can call, it's advisable to have that person on the speed dial in case of anything. Yeah.
All right. Thank you so much, Ruth Mwiti. This has just been such an informative podcast. And I hope you viewers who are watching were taking notes, because one thing she said is ignorance is no excuse. So it's up to you to invest in your knowledge, invest in your good team that know about the taxes, people who are eager to find out what are the new changes coming in, the finance bill, how does it affect us? But also at the end of the day, the individuals, how their taxes affect you, your income. How do you then adjust from that? You need to make some changes. You need to start seeing how to increase your source of income as well. But all that and more, as you stay in this episode Beyond the Balance Sheet, we are always discussing about money and how to improve your finances to get a better future. So until the next episode, see you soon.
Beyond the Balance Sheet is where personal finance meets real impact. We shine a light on everyday Kenyans, making extraordinary money moves, proving that financial growth is possible for everyone. Subscribe and join us as we rethink investing together.